Hey guys, Alchemist here. So firstly, I just want to start off by apologizing for not getting a video uploaded last week. I actually just finished my last exam for this semester on Thursday. So for those of you who are interested, I'm in my last year doing a double degree majoring in finance and philosophy with 2 subjects to go next semester, and then I'll be done. And to make it up for you guys, hopefully you can tell the audio on this video is much better. So I have gone and invested in a nice Shure MV7 mic. I am still waiting on my boom arm to be delivered. So currently I am just using it off a tripod on my desk. So it will be better and better from every video here on out. And I do want to let you guys know that I will be taking this YouTube thing quite seriously from here on out. So for those of you who are watching these videos and not subscribing, which are the large majority, I do suggest that you subscribe from this video onwards, just to make sure that you don't miss out on the weekly content that will be coming out every single week. So let's get started. We will be always starting on the weekly and just with a clean chart. So the first thing I want to do is just identify supply and demand areas that we're currently trading within. So we can see here, we have this area of demand, which we just tapped into. And then on the weekly, this is the supply level. The only other thing I really want to note here is that we had a sweep. This should look pretty similar. The last few videos have been marked up the exact same way. And then we'll jump down to the daily. So with the daily, and following on from my previous video about market structure, I do treat it in the exact same way that I treat the 15-minute, except I look for a break of structure of 110 pips. So if we look at this here, so this is as of the 17th of July, but what I want to actually do is just take it back to the beginning of last week. So last week I wasn't really able to trade because I was studying for my exams, but let's just use the replay function and we'll go back to the 13th. Perfect. I'll make it full screen again. All right, so now we're looking for the most recent break of structure of 110 pips. So looking at this here, we can see that this here was 141 pips. So we can say that this is our daily break of structure, making this point here our daily high. And as we should know by now, our daily low won't be confirmed until we start to see a bullish pullback of at least 110 pips. Now, another thing I did forget to mention in the mapping market structure video that I uploaded last week or the week before is that we need to see at least 2 candles moving in the opposite direction to validate the pullback. So in this case, if we are going to be waiting for that bullish pullback, we need to see 2 bullish candles trading higher than each other for a pullback of minimum 110 pips to qualify that as a pullback, a valid pullback. Perfect. So we don't have our daily low yet. Now we just need to jump down onto the 4-hour, and we want to mark out the same sort of thing, the 4-hour highs and low, as well as the most recent 4-hour break of structure. So for 4-hour, it's a pullback of 90 pips that I want to see. Okay, so if we look at this candle here, this one up here, yeah, that's perfect. That's 90 pips. We can mark this as our 4-hour break of structure. And with my 4-hour high, I just like to use the horizontal ray. And then with the low, again, we need to see a bullish pullback of at least 90 pips, which since this break of structure, we are yet to have. So I can't actually map my 4-hour low just as of yet, but that's okay. Next thing we need to do is mark out some catalysts for pullbacks and some valid POIs. So currently we're trading here. And then we would have something here. Most likely will be in just this lower week because this was already mitigated. We have this. We have this inside bar. And of course we have the extreme. Now, why I'm marking even the extreme as a catalyst for a pullback, and a question that I got asked on a previous video, is regarding strong and weak highs. So this here, although it was a demand zone at the time because it did break the structure point here, this low failed to put in a high, which was higher than this high, and we can see this was actually a sweep. So if we look at this, we failed to break with a body close above. So given that this was a sweep, we can say that this low failed to put in a higher high than this high, and therefore this low becomes a targeted low. And essentially what that means is we'd want to see this low be taken. Now the next question you might ask is, okay, so when does it actually become validated as a targeted low? To me, it's when I see a 4-hour break of structure away from its objective. So the objective of this low was to put in a higher high. Now, once that failed, and once we then saw a bearish 4-hour break of structure, we can see that this demand zone, which was the final demand zone that attempted to break above, this demand zone failed to hold. Now, when this demand zone failed to hold, we therefore have supply holding. And that switch from bulls to bears is therefore what identifies for me personally that this low therefore becomes targeted. And at each one of these zones, we can look to see for a pullback, but then essentially we should be just taking continuation shorts off of each one of these zones. So let's see if we can actually frame anything on Monday. So now that we've got all of our 4-hour zones, we want to jump down onto the 15-minute. Sorry for that. I think that went to 15 months. Perfect. And we want to then identify our most recent 15-minute break of structure. So we should all be pretty good at this now. We just need to see a bullish pullback of 22 pips and then to see the low fail. So let's see how far this is. Perfect. So that's our 15-minute break of structure. This will be our 15-minute high. This is the catalyst for a pullback. And we don't yet have our 15-minute low because, oh, we have had that pullback here. So this is our 15-minute low because we have actually seen a bullish pullback of over 22 pips. So essentially we now want to see if this low is going to push us back up into a zone that has interaction maybe inside these wicks here, or whether we're just going to break below and look for a lower catalyst for a pullback. All right, so we can see we've already traded below. So this actually looks like market open. Yep, so that's market open on the Monday that's just passed. Let's just play price ahead a bit. So I don't trade Asia personally. This is still all in Asia. Okay, still Asia. In Sydney, the London Open is at 5 p.m. So this would have been the London Open candle just here. We can get rid of that. Well, actually, we can just move it down here. Perfect. And now, a place where I've previously gone wrong, and I see a lot of people doing this now as well, is once we've come into this zone, which is a catalyst for a pullback, which some people actually misidentify as a demand zone, people wait to see a 15-minute CHoCH and just wait to see a pullback trade to take out these highs. Now that doesn't make any sense because currently we're on the daily, we are very bearish. On the 4-hour, we're very bearish. And on the 15-minute, we're also bearish. So yes, whilst in this case, when we've had a CHoCH, so we can see that liquidity below here would have been taken, the high has been taken. It doesn't mean that we are now just going to go to the moon. We can see a small pullback and we will see the 15-minute time frame shifting. So it will go from bearish to bullish. But we have to ask ourselves, why is it actually shifting? What is the purpose of the shift of the 15-minute? And to me, when we are very bearish on all 3 timeframes, it's simply just to push us back up into a better zone to continue taking continuation shorts. So now if this is London Open on Monday, let's just try to see what we can frame here as potential POIs. So we've got this guy here, which would have been the extreme that broke the structure here because we know that this was more than 22 pips. So we can actually move this down now. So this is our most recent 15-minute break of structure. And this is our 15-minute high. So if we are looking to take counter trend longs at this point, we should know that we should only be trading up and until these sort of zones and then taking continuation shorts deeper into the demand zones below. So if we look at this as well, we can see that there would have been interaction here. So this was the demand that pushed us above. And then when price came to interact with this demand, it did have a push up, which swept the liquidity above these 3 candles, and then ultimately it failed. So we can see this is our flip zone. We can also see that it's partially been mitigated. There might still be something inside the wick further up here, but we can say that this zone's actually been mitigated as of now. And then we've got this area here, which we're currently failing to close above. And let's just mark these as liquidity sweeps. So this just adds further confluence that these POIs are valid zones. So let's see if we are going to get a reaction off of the extreme or not. Now, personally, I wouldn't be looking to take a counter trend long at this point. It's a very low probability trade. And it would have obviously failed. Now we want to see if we are going to get interaction with this lower catalyst for a pullback now. This is no longer our 15-minute low, but we haven't had a 15-minute pullback of at least 22 pips. So this is actually our 15-minute break of structure now. Get rid of this. And let's just play price forward. Okay, so we're now in this next catalyst for a pullback. Okay. Now let's see, we've taken the liquidity below. So to have our first sign of a trend reversal, it would be the CHoCH, the change of character. So let's see what happens here. We can see we've had interaction with this supply zone. Zoom in for you guys. Perfect, so we have had that change of character. So in this circumstance here, and I know I've previously done this in the past, we will then just mark up this as the extreme of the leg, wait for price to come here, and potentially even just set a limit. But like I mentioned, when we're so bearish on so many different timeframes, why are we looking to take longs? So in that sense, we should just be looking to take shorts, and we should try to identify zones in which shorts make sense. So currently, let's just mark out our structure points. So we know that this is our 15-minute break of structure. We know that this is going to be a pullback of more than 22 pips, but let's just confirm. Yep, so this is going to be our 15-minute low, leaving this guy up here as our 15-minute high. So right now, we're only interested in this leg of price action. Sorry, excuse me. So now we want to also identify zones where we can see continuation shorts. Now, when I'm looking at this, you can see that the wick came down, the next one came up and swept the liquidity above. It's likely that this has had some sort of interaction. Whereas here you can see the candles just trading lower and lower. When we do see that sort of pullback with the liquidation above, we can usually sort of say that this has probably had interaction. But let's just go ahead and check. So if we put a horizontal line here, what's this actually come into? Okay, so we can see this here. This would have been a break of structure from down here. And we can see this large injection of buy orders, which saw the market trading higher for the next couple of days, sort of originated from this point here. So this candle, the one I've just highlighted, we can see it's been fully engulfed. It swept the liquidity below there. It has had some interaction with this, although this wouldn't really be a supply zone because it didn't put in a lower low, but nevertheless, it has that interaction, and we would see that on a lower time frame as well. And most importantly, it's responsible for this whole break of structure. Okay, so that's what the interaction zone over here has come into. Now, that's not to say that this is now an extremely valid POI. All it's to say is that if price does come back to this area, we should monitor how price develops. So now that we can say that this is our catalyst for a pullback, we can identify this guy here as our flip. So this is our flip zone. And we can see we've just tapped into it. Now let's drop down to the 1 minute. And let's have a look and inspect this a bit further. So we've tapped in, we failed to put in a higher high. Then we've this little bearish candle here. This would have been our demand because then this caused a break of structure on the 1 minute, which is not very significant, but nevertheless, it did put in a higher high than this. So this would have been our L pod, our last point of demand. And then that failed. You can see this candle came back up and traded into this overall zone. So this would have been the supply zone. That's been mitigated. And again, we can say that it's not really demand at all because it didn't put in a higher high, but it's an interaction zone. Then this failed. This came back up into this whole range as well. Mark that as blue. Okay, and we can see this guy is a really nice POI how it's actually developed, and it's also where the extreme of the leg that broke this structure came from. So we can look at this as a potential area in the future. Now, given it's not the extreme of the leg, even this I wouldn't really class as the extreme, more so this, where we can see the liquidity has been swept above here. Sorry. You can see the liquidity has been swept there. Off this guy here, I would be happy to place a limit, but off anything off a flip zone, I will not place a limit. I would wait to see one of my liquidation models play out, or I would wait to see a reaction at that level, another change of character, and then I would enter off of that one. So let's just have a look at this now. So we know this is our last unmitigated supply, which was inside this last flip zone, which was the interaction with the catalyst for a pullback. So this is a very important sort of 15-minute POI here. Then we've broken structure to the downside. We've had a 15-minute CHoCH up. However, we're not looking for longs because we are only just focused on shorts at the moment, given how bearish the daily is, how bearish the 4-hour is, and the 15-minute. Whilst this, yes, in essence is a 15-minute break of structure to the upside, for me, I don't mark it as a 15-minute break of structure until I get my first level of respect. So if this was to come down, interact with something in here, then push up again, then yes, I would say that the 15-minute has become bullish. But currently, it's still very bearish in my eyes. It's just had a change of character to push us back up into premium, sort of, I'd guess, just for us to be able to take continuation shorts. So now let's see if we either sweep this guy and then come back down, or whether we get an entry model somewhere else. Okay. We haven't quite tapped it just yet. We can see we've already had our first CHoCH. Which is there. Now, one of my entry models, if it hasn't actually tapped, if it's come into the supply zone and then this whole first CHoCH gets swept, so essentially this would be the early sellers. So I would have previously been one of these early sellers and I would have been swept and liquidated. So if I wait to see all of these be liquidated and then price to push further up here, then that would also qualify for one of the liquidation models, which I have to see play out before I take an entry. So let's see if this whole thing gets swept. We can see here that we had some interaction. In these buy to sell wicks, so this to this. That's where price is currently trading. But again, I would not be placing a sell order off of here, as I haven't yet seen one of my liquidation models play out. Okay, now this is perfect because we can now see that all of these early sellers have been swept. And not only that, we've actually built up inducement above this area. So we created liquidity. This was liquidity to be swept. A lot of people would have been selling off of here as I first put that drawing tool on. And then a lot of people would have been selling again here after this sweep. Then prices come all the way back up, swept all of these guys and tapped into this 1 minute refine zone that I had marked up here. So as you guys know, what I like to do is take 25% of the zone. And off of this, I'm happy to place a limit now because I've actually already seen this liquidation take place. So once price was pushing back up into here, and I knew that this would have liquidated this, we've had the inducement and we've had that first minor break of structure on the 1 minute below, I'd be happy to place a limit here. And you can see, guys, like that's exactly to the point, to the pip of the 25% zone. But again, just because of spreads and everything, as I told you guys, I like to play it with 2.5 pips. So I would just push it down. So I would want to cover the top a little bit, and then I'll just play the entry wherever I can get 2.5 pips. So that's there. And then let's see where our 4R is, which if this trade plays out, we would want to be taking 25% off at this zone. So we can see we're now tagged in. We can see again, we've had some interaction here. This would have been the demand that pushed us above here. And then we've tapped in with this week. We've then rejected, and essentially supply is now holding, which is a good sign given that we're going short. And now we've taken our partial at 25% partial at 4R. So now essentially we're risk-free. I still wouldn't be putting my stop loss to break even. I'd just leave it running above here. And now where would we target next? So using the same logic I did before with the targeted lows and the protected highs, if we look at this and we can say that this low failed to put in a high, which was higher than this high, then essentially we'd like to see this low be run, okay? So what we would do is my next target, which I'll be taking 65% off, would be 25% of this zone. Now, why I would take 65% off is I'd like to leave a 10% runner. Previously, I was leaving a 25% runner, but a lot of the times when I was doing that, the rest of the position would either go to break even or actually become a stop loss. And I didn't want to leave 25% of the trade still on the table. So I've decided to only just leave 10% as a runner, and only when it's actually pro trend for the 4-hour move. So essentially, this would be pro trend on the 4-hour because these were just catalysts for pullbacks, and we're waiting for price to come deeper into this zone. So knowing that this is now therefore a targeted low, let's just mark that up as well. So this is now targeted. We could say we can run this into 25% of that, which will give us 12.7R if we're successful. So currently we're risk-free on this trade. Let's mark out some other zones where we could see a reaction. So we could see price come into here, which would have been the flip, which has swept liquidity. Mark it up again. That would have swept the liquidity there, and we've seen a lot of bullish momentum enter. So we could potentially see a pullback off of this. Essentially, we would just treat this in the same way we did on the larger scale before, as a catalyst for a pullback. There we go, we got our pullback. We can see that this has swept above here. So now that we have had that, and once we see demand fail here, so if we get this demand failing, and why this is demand is because it's put in a higher high than this. If this demand fails, then this would be valid for a continuation entry just as a scaling. Okay, so that's now failed. So we could look at this. This does look quite a lot bigger. Yep. So we'd definitely be taking 25% of this. And we could play this one with a 3-pip. So my charts aren't as clean this time. It's just because there's quite a few different tools that I had to put on. Okay, and once we've had this now, we've had another break of structure down. We could look at this as inducement for this zone, but we can see we're actually coming to our take profit. Perfect. There we go. So that's now been hit. So let's bring this down. So that, therefore we've got 12.72R in the span of 43 minutes. So that would have been 65% taken off here. So let's just mark that up. Just have to get a calculator out for this one. 0.65 times 12.72. That's 8.27R plus the 1R, which would have been 25% at 4R. So that's 9.26. In the span of 43 minutes. And then what we would do is we would just leave a 10% runner. Now with the runner, what we'll do is we'll go back out to the 15-minute. We won't be looking to take this anymore, so let's just clean this up. And if we look at the 15-minute, the next sort of zone that makes sense, well, we have this 4-hour catalyst for a pullback below. That's still a whole 46 pips away. On the 15, let's identify if there is anything in between these zones which would be of interest. So firstly, I can see this straight away. It just comes with time, I guess. This zone here. This zone has swept the liquidity below all of this, even below from here. And has then broken structure above. So here I would be more than happy to be holding 10% runner, especially because we're pro trend on all time frames now. So let's pull this across. And then we can run this up until 25%. Drop down to the 5-minute. Perfect. And there we go. That's now been hit for just under 25R. So at 10%, that would have been an extra 2.5R, taking the total to 11 point something. Let's just work it out exactly. 11.75 in the span of up to there, an hour and 35 minutes. So for me, my target is 5R for the week. So therefore that would be more than my fortnightly target. And it's just in one trade, on the one pair that I trade in the one session. And that's really all I need to focus on, guys. I hope that you've enjoyed this. It probably hasn't been as successful as my other videos. Sorry, I'm just getting back in the swing of things, having taken a week off the charts. So I'm just going to go through each day of last week and have a look at the entries that I missed. Obviously, I wasn't trading last week just because of exams. But now that that's over, I will have a bit more time to go through the charts. But I also want to know from you guys what you want to see more of. So please leave me a comment below and just tell me in terms of theory what you want me to cover, whether it be structure, liquidity, protected and targeted highs and lows, entries, whatever it might be. I do have 6 years of experience now in the Forex game, and I would say I'm quite successful in trading. But yeah, if there is anything that you guys in particular want me to cover, please let me know. Otherwise, I'm just going to keep doing some more trade recaps and things that I think is interesting whilst I'm putting together my course. So if you're interested, let me know. If you want to know more about the course that I'm putting out, please also comment below. Make sure you're subscribing just so that you don't miss the other videos that I'll be putting out each week. Leave a thumbs up. And yeah, if you have any questions, guys, please leave them below. Thanks. Bye.